This is business news coming to you live from our Refield studio. Good morning. My name is Modesty Nyanglong. Foreign reserves have hit $53.1 billion as capital inflows from stronger crude oil earnings continue to accelerate accretion. Data from the Central Bank of Nigeria (CBN) website showed that the reserves closed at $53.1 billion on August 24th, the highest level in nearly 18 years. The current reserves position is far higher than CBN's projected $51.04 billion year-end target and will cover over 12 months' imports from the economy. Nigeria's external reserves, which provide the CBN with the capacity to support the local currency and meet external obligations, have continued to rise steadily. Further analysis showed that the liquid portion of the external reserves stood at $52.5 billion. Brent crude yesterday traded around $87 per barrel, above Nigeria's 2026 federal budget benchmark of $64.5. The price rebound would largely bolster the country's fiscal revenues. As an oil exporter, Nigeria continues to earn more per dollars to support naira stability and bolster external reserves. The management of Dangote Petroleum Refinery and Petrochemicals has expressed concern over the continued issuance of petroleum product import license despite the refinery's proven capacity to meet and exceed Nigeria's domestic premium motor spirits PMS requirements. The refinery, in a statement, noted that while it remains fully committed to supporting the country's energy security and ensuring uninterrupted availability across the country, the statement, citing a market data available to the refinery, disclosed that PMS accounted for approximately 40% of the fuel supply into the Nigerian market in July. A development, it said, raises questions about the necessity of continued large-scale imports when substantial local refinery capacity in operations. It further explained Dangote Refinery has consistently maintained sufficient inventory levels and reserved product volumes to guarantee steady supply to the Nigerian market. This commitment, the refinery explained, has required significant investment in storage, logistics, and working capital, all aimed at protecting Nigerians from supply disruptions and market volatility. However, the refinery stated that the absence of transparency regarding the actual volume of imported products expected into the country makes effective production and inventory planning increasingly challenging. It argued that maintaining large stock positions without clear visibility into import volumes imposes substantial carrying costs on the refinery and ultimately undermines efficient market operations. The federal government has said it is targeting 8,000 megawatts of electricity generation and transmission by the end of 2027 as part of efforts to improve power supply across the country. The Minister of Power, Joseph Tegbe, disclosed this on Wednesday at the launch of the Renewable Energy Asset Management Company in Abuja by the Rural Electrification Agency. Tegbe said the government was targeting 6,500 megawatts by the end of 2026, noting, however, that the country currently struggles to wheel about 5,000 megawatts. The minister also expressed optimism that Nigerians would soon enjoy round-the-clock electricity, saying recent improvements in the sector were only the beginning of the administration's efforts to transform power supply. He expressed concerns that Nigerians had lived in an embarrassing paradox over the years, living without electricity despite its richness in power assets. He said the newly launched RAMCO would introduce a new approach to the management and stability of renewable energy, adding that its mandate would eventually extend beyond renewable energy to the entire electricity grid. Nigeria and Thailand have agreed to deepen bilateral relations in technology, agriculture, commerce, renewable energy, and other strategic sectors, with Vice President Kashim Shettima calling for a comprehensive review of the relationship between both countries. Shettima said existing partnerships should be elevated beyond traditional trade in crude oil and agricultural commodities to take advantage of opportunities